more important, fundamentals, seasonals, sentiment. I have said what I think is best. We will see by the end of the week and end of the month, okay? I love you, family. I'll laugh until I die. I hope I don't die tomorrow, but until then, I love you. Boom.
Hey everybody, thanks for tuning in to today's A1 trading session. We love engaging with our audience, talking shop, taking requests, and sharing our favorite setups. It's about that time where we're going to review a bunch of indexes, stocks, currencies, gold, silver, Bitcoin, and pretty much anything else and share our insights. If you're wondering what trades I'm in, if you're wondering what trades I'm taking, and you'd like to see exactly how I'm trading everything, you can actually follow my trading signals. If that sounds like something you're interested in, we'll share a link in the chat. You can sign up. You can sign up directly with the link or speak to a support rep if you have any questions. If you're asking, what do I trade? Pretty much everything. Indexes, ETFs, stocks, options, futures, Forex, and crypto. Thoughtful analysis, active trading. Check it out. And now, back to the show. Good morning, everybody. Happy Monday. Welcome back. Just had a couple levels here on SPX this morning. We gapped lower. I think the market's going to be pretty range bound today, maybe quiet, maybe a bit of a sell-off. We did have 9 consecutive closes higher. So if we go into, the futures market, we had a lot of green candles in a row, starting with this April 22nd. 1, 2, 3, 4, 5, 6, 7, 8, 9 candles in a row. First time in 20 years that we've had that type of consecutive run. So was expecting a bit of a pullback. Friday before the market closed, I did put on a synthetic short on MES, which was I bought a put at 5,700, sold a call at 5,700, and ended up grabbing about 30 points last night on that trade. I'm out of it. It's pretty early. I just didn't want to take the upside risk, but it cooperated right away, so I grabbed it at a few bucks there. And then this morning jumped in and did some selling on SPX. Worked out pretty nicely in the first about 30 minutes of trading. Maybe it's all eyes on the Fed for this week. We did have ISM numbers coming out this morning. It was ISM services for the U.S. came in slightly better. 50.2 expected. Previous 50.8 came in 51.6. Tomorrow, no major news from what I can see. Employment news coming out of New Zealand. After that's actually Wednesday's trading day. And then Wednesday, we have the Fed with rate decision, with press conference. Probabilities have shifted a bit. So Jerome Powell and co. likely pausing through May, looking like they're going to pause through June, and possibly a cut starting in July. A big narrative shift over the last week or so. We're staring at this market. We're back above. Let me go to SPX here. So we're back above Liberation Day levels, right? So here's our, support. We had our flush down Mag 7 rotation, 2-week pullback, and it was the flush lower. There's your Liberation Day announcement. So the market is safely back above Liberation Day announcements. Now that's the stock market, okay? The issue that I have is that, stock market's above Liberation Day levels. That's fine. I don't think it'd be difficult to see if we're going to form a pattern here. Left shoulder, head to neckline. This might still be working out a neckline. It might also have this could be the intermediate top and we pull back a little bit. That could be our neckline. So I don't think we're going to be, blindsided by oh, wow, I can't believe this bullish move. It's well, we totally can. If we pull back into a right shoulder, I sometimes you got to give the market a lot of credit for being as technically obedient as it is. This was a, previous all-time high that became the technical support. That was a bottom in all this chaos, right? If the market comes up here and forms a neckline, well, that was resistance on the right-hand side of the trend line. That was resistance there. It was resistance that became support right here. So if the market pulls back, is it possible we pull back and just use the backside of the trend line and some gaps to then offer up the right shoulder? Maybe, So if it's left shoulder, head to neckline, pull back for right shoulder, find a gap in here, high or low, measure that move. I'd probably measure symmetry, and I'd be a little bit more aggressive adding trades into, another push to the upside to see if we actually can get back to, 6,000 or 6,100. I'm still cautious to the downside. I still have hedges to the downside, but now I'm kind of anxiously waiting to see if I can get a dip. Most of what I'll be doing here the next couple of weeks, probably the next 30 to 60 days, is focused on just selling calls. either stocks that I own or looking at some positions where I might just buy the stock, sell a call, and sell an in the money call and try to grab a couple of bucks and generate some income. I don't know if the market's going to have a nasty week. If we go to the weekly candles, we've had 1, 2, 3 out of 4 weeks green, and it's obviously been a big recovery week since the April 7th to the 9th. Right, so the 7th was the bottom, the 9th was the tariff pause, and we've had some pretty strong upside since. So anyway, in the bigger picture, the integrity of the bull market is still there, right? I mean, we still have a bull market, 200 moving average on the weekly time frame. All this was supported even through the 2022 bear market, and even the flush out we had here. It's like it's offering a lot of support. I'll continue to say this: nothing good's going to come below. If we break 4,800 convincingly, nothing good's going to happen. But if we can maintain, basically this being the floor for the year, then it's possible that the market might be noisy, but I would say the market's going to do everything it can to kind of grind higher. So to me, that's a little bit easier, is to at least have hopefully a clear path to all-time highs. I just hope we have opportunities to kind of scoop up some dips, and we might have some noise along the way. But I would say that for right now, this market is looking a little bit more poised to try to stay bullish. It's gonna slow down though. I don't think the volatility is going to be nearly as chaotic and whipsaw and kind of parabolic as it was. We could still have elevated volatility, but I would say not so much. The one thing that I am concerned about, and I think we need to pay attention to, is the 10-year yield, because with the Fed changing their probabilities here, this is a pause. Okay, this is a pause for this week, Wednesday. So about a 97% chance Fed does nothing. This is a pause, about a 68% chance they do nothing in June. And then the first rate cut would possibly be in July. Now, why would the Fed cut rates if the market is on its way back to all-time highs? Why? Why is there a need? Is there a need for the Fed to cut rates at all? Do we have to cut rates? If we're sitting at all-time highs with a resilient economy, why the heck does the Fed cut rates? Is it the liquidity air pocket? Is it the refinancing? Well, I mean, I understand why they would want to cut rates to lower the debt cost, right? Servicing debt at 4% or 3.5% or low threes is a lot different than 4.25%, 4.5%. But the world has to refinance on 10-year yields, roughly. So 10 to 20-year yields. If you want to buy a car, you want to buy a home, all of the major borrowing timelines are going to be based around these. And just like we saw last year, this is the one unknown that I have going into 2025 is if the Fed starts cutting, are we cutting rates and the bond market still goes up? Like the bond yields still go up? Because that's not a good thing. This makes the US to me look like more like an emerging market situation where we would have higher yields to attract back foreign investors, and we're watching essentially our bond market break, and we're still getting a weaker dollar. So anyway, I don't know. I just think it's weird to see the Fed. Why would they cut rates at all if the stock market's near all-time highs and we still have sticky inflation? It's not like inflation's going low, and we don't have yields that are really cooperating. So if the Fed cuts and this does not go down, if the 10-year yield, 20-year yield does not go down, that is a problem. Because the only time the 10-year yield, 20-year yield was going down was when the market was literally breaking, right? That was the big correction. This was our, dump for the beginning of the year. And yeah, yields are dropping because everyone was worried. Everyone is going, there was a fleet of safety. But then that basis trade broke. So that to me is now the big unknown for 2025 is why do they have to cut? If they do cut and the yields react different like they did in September of last year, I have a lot of concerns moving forward to the longevity of a bull market. I think we would end up probably having some, what would be a very ugly, difficult pattern would be something like this. And this is what has happened since 2018. And it wouldn't surprise me if we go into another cycle like this. Let me make this a little bit bigger. So connect the lows here, connect the recent highs here. Let's say that, we do make all-time highs and the Fed cuts rates. Why are we cutting all-time highs? I have no idea. Why are we cutting into a resilient economy versus a weakening economy? I have no idea. But I could see the market doing that. And this is the same thing as 2015 to 2016 when the market was sideways for 20%. This is the same thing as 2018 to 2020 when the market had a volatility event. So with 2018, we had a crash, rallied all the way back up. We crashed again, rallied all the way back up, crashed again. So in 2 to 3 years, multiple times, we've seen the market actually return next to nothing unless you time the market. Make sense? So anyway, we'll see. But top down, things are lower today. It's fine. I mean, I think any dips, I'm interested in still buying dips. Where at? I mean, I'd love to see a pullback realistically towards like 5,500. If we get a pullback into this gap between 50, I'd say 54 to 5,200. This is SPX. So between 54 and 5,200, I think that'd be a pretty nice opportunity to, if you are long, define risk there could work out very, very well. Also having some potential hedges in case it wants to come back down and revisit lows. But there's a couple ways to play this. I mean, I might be looking at strategies where if we get into this window here, I might go out 6 to 12 months and do a very cheap call spread. Maybe doing like a out of the money call spread that like 56 to 6,000, pay maybe 20-30% of that max profit. So if I could risk $300 to make $1,000 and scale that up or out, that would be one way to look at it and see like, well, hey, if we get to all-time highs by the end of the year, that might be a good trade. So that's what I'm watching for. All right, Nasdaq, let's work our way down. So Nasdaq, we have some measure moves. Same thing here. Obviously we have some gaps to fill. We have some pullback levels. We have some gaps to fill. Okay, so if we have a little tiny gap fill, I'm not super excited about buying that dip. If we pull back a little bit more meaningfully, 18,800, 18,400, more interested in that dip on NDX. Right? So somewhere in here, I like that as a higher low. Connect these lows. It's probably going to be a trend line bounce. And then we'll see if this is a bullish pattern. If this is a left shoulder, head to neckline, right shoulder, try to find that higher low. Market carves out a bottom, gets back up to the neckline, breaks the neckline, measure that move, and all of a sudden we're looking at all-time highs coming together. Not bad. Okay, Dow is now back above the Liberation Day highs, creeping up into that 200 moving average. That's probably a good thing. Just playing catch up. Russell's at 199.47. I actually have some calls on Russell at 200 that I'm looking to roll. VIX it was up on the morning and it's starting to go flatter. So we'll see if VIX can if it settles in sub 20, then we're likely looking at some more melt up highs. Bond volatility is decreasing, which is a good thing. Dollar index, I think any rally in the dollar is probably short-lived. I've said this, the 101 to kind of 102 handle on the dollar. If we just slowly kind of pull back to that level, watch for a nice clean trend line, break of the trend line, and then it's pretty simple. If we go a little bit higher, try to draw a nice trend line break. If we break the trend line, I would sell the dollar. If we pull back to retest, I would sell the dollar again. Area 1, area 2, stop loss would be like 1 ATR higher, and try to avoid some type of break of that trend line. But if we then sell off and hit fresh lows, hit some symmetry levels, we're into a weaker dollar. There's good risk reward, good reward to risk rather in that position. So I just don't think that the dollar is the time to short. I think we're still going to have a bit of a pullback and a near-term recovery. Okay, oil. Oil had some drama over the weekend. So we have natural gas hold on to gains. This is 2 hours ago. OPEC looks to hike supply, so there might be some increased production coming in oil. This is why I said I'm really picking my battles in oil. I do have a long position on CL, so I'm long on oil futures right now, with a position that basically, if we don't break these lows, then my position is going to be okay. But if we are heading lower, then I'll take a small loss. I have a trade that's set up to make about $650 max profit, and my risk is about $650. So it's a 1-to-1. It's at the lows. We'll see if these lows hold. I'm not shorting oil. I'm looking to see if like this, kind of April 9th move that kind of broke the market, April 7th in the stock market. April 9th, we had the big tariff announcement. If this low holds, then I'd like to see price range bound and hopefully see, CL make a few bucks. But that's it for oil right now. I still think possibly range bound. If this floor continues to just get beat to the downside, there's really not much stopping oil into maybe this. I mean, the scary part is how low do we go? I mean, uh, oil becoming unprofitable isn't that far away. Like when companies don't want to go online because it's no longer profitable to be drilling oil. I mean, in the U.S., that's probably around 55 to 60 bucks a barrel. I know that the U.S. and Saudi Arabia can have lower prices and still have some margin, but nobody's happy operating at like paper thin margins. It's expensive to turn on, it's expensive to run, certainly new projects, and it takes years and years and years to get these things up and running. So just the constant back and forth and disruption to supply and demand can be, wreaking havoc on prices. So, but I still think, bigger energy and non-correlation. I like energy for that matter. We're talking about this build out in AI, talking about, infrastructure, electricity, alternative energies, nuclear is getting some love these next like 12 to 24 months. But oil might be, kind of a perma bear case. I'm not sure. So, define risk on oil, nothing crazy. I'm not making any bold predictions. Gold and silver. Gold is catching a bid. So, well, we pulled back to a 21 moving average. It's still not deep enough for me to say I'm buying gold. I mean, this is the daily chart. I said at least a 21 period. Well, I got it. It just wasn't enough. I was looking for a high, low, lower high, lower low. It's still possible we have a flat pattern here. So if this is a little pullback, come back and find that flat pattern and then sell back off to find a measured move around 31.38. I'd like to see a round number around 3,000. Obviously, the deeper we go, the more attractive gold looks to me for a longer term position. But gold caught a bid. So I'm not buying it this near term. I want to see some deeper pullbacks. I'm willing to stay patient. It might just be sideways right now for some consolidation. Silver, fine. I'd still be looking to add more positions to my silver exposure. If we come back down to 29 or come back to 26, I'm looking to stay long silver. And I still like the technicals on silver better than gold. Bitcoin, bit of a pullback. I'm not. Well, I suppose I could adjust this. We just kind of drifted higher for a couple of highs here, like that little fib high. I'll go ahead and make the swing right there around 97, almost 98,000. And now if we pull back to I'd say 50% pullback would be a good spot to look for on Bitcoin. If we pull back to the 50% and we head back into highs, that could be a good swing trade. So swing, pull back, swing back up, push to symmetry, maybe 107 to 108. I've said this the last couple of weeks, perhaps Bitcoin is going to be another consolidation where it goes up on a push, consolidation, but later on, I mean, it's possible in 2025 we still make all-time highs. But I obviously would like to first start with a dip to buy. And if it hits a target, I might take some profit off the table there. If it breaks the highs, I'm looking at the bigger picture swings. I've got like a 125 to 145 measured move on Bitcoin this year. Well, that's I'd say I've got a 125 to 145 measured move. I don't know if we're going to hit it in 2025, but at least it's out there technically making some sense. There's a 120 to 125 cluster. There's a 136 to 145 cluster. There's a measured move for symmetry at 132. So, if we can clearly break 109, then yeah, I want to see some higher highs. Okay. MicroStrategy have a bit of a pullback. They had terrible earnings last week. It doesn't even matter because they don't trade like a software company any longer. They trade like a Bitcoin. So I still have it covered into June. I might still, sell some calls. My break even on MicroStrategy is 254. But it's volatile. I get it. We were down here towards 245 or so. I mean, so even if I did see price come all the way back down, I'm just going to continue to sell calls and lower my cost basis. Coinbase hanging up above $200. Ethereum could be close. Ethereum could be a good story here in the next, maybe, I don't know, maybe the next month. If we break the right side of this trend line, Ethereum might look a little bit better. I would say to be safe on the daily time frame, you're going to want to see Ethereum get above the 200 moving average. So we'd like to see it break the trend line here, get back above the 200 moving average, look like there's a convincing bottom, and upside potential is good. Reward to risk could be favorable. So we get on the right hand side of the trend line, small risk below the U-turn low, and upside potential would be retesting 4,000. Copper, I'm going to stay out of copper for right now. Just a massively disruptive high and low. That was, what was cooking all-time highs and a 25% drop. Certainly put the brakes on and just screamed volatility. So I'm like, yeah, I got lucky on that little trade. This was up, I don't know, like $1,500 at these lows. It was threatened for it was about 2 weeks, and then settled in and took full profit on it. But I'm not trying to pick bottoms or do anything silly without defined risk. Japanese yen clawing back a little bit. Let's take a look at currency strength for the morning. So Friday we had the Aussie and the New Zealand. Today we have the Japanese yen on top, New Zealand and Aussie as well. Swiss and Euro baseline, pound baseline, dollar CAD still weak. So I'm still holding two things. I've got the EWJ, which is up above some fresh highs. So my EWJ position, which is just holding the Nikkei essentially. EWJ is up around $2,000. So I'm just going to hang out of that a little bit longer. This was a nice way to play the crazy collapse from July to August. Put in a couple levels here. This is actually filled. So that was, these are 2 levels that I bought. So I did a $1,500 allocation, buying this recent breakout, and also, buying the lows from August 5th. And that puts my break even right in between. So break even's about here, off and running. If we make some fresh highs, hooray. I'll just ride this thing out as long as I can. This is also a, kind of non-US play. DAX, freaking unreal, man. It's up 26% off that crash. So good opportunity to buy. I didn't do it. I sold premium on FEZ. That's about it. So, I mean, I'm going to make some income on it. There's not really much to do. I'm going to make about $300. Hooray. As opposed to, if I bought it at, even $50, be up $6 or $7 a share. That'd be a lot better than just selling some premium. FTSE doing the same thing, just back above the 200 moving average. What was a crash looks pretty encouraging now. I'm going to stay out of Argentina. China also looking better. Like, we're still getting this move that's non-US. Europe looks good. China looks good. Brazil still hold above the 200 moving average. Latin America still hold above the 200 moving average. Non-US. Mags. Apple is down a little bit today. I took an earnings trend Apple that closed out for profit. Apple down to 198. Earnings play where I needed price to get below the blue line. It did. So I grabbed about a 20% winner there. Mags. I wouldn't mind seeing a higher low on Mags. If we get a pullback here, kind of the same situation. Is this going to be a bullish pattern? Maybe. Is it a double bottom? I mean, I will say this. Why would it be bad to own, Microsoft, Meta, Google, Tesla? Like, I suppose like Apple, Nvidia, maybe the more uncertain of the Mag 7, just with their exposure to China. I think Apple could have some struggles. Innovation on Apple seems to have slowed a little bit. It's just like, yeah, you buy a computer, or you buy a phone, that's Apple's innovation. But I know the company is more than that. I mean, whatever Apple wants to do, I'm sure they can dominate if they want to. If they want to spend the time and resources to do it, I'm sure they can find a way to dominate whatever they choose to do. But right now with having this trade war with China, I mean, Nvidia and Apple could be the 2 Mag 7s that may not perform very well. So do I want to be an independent stock picker on Mag 7s? I still like Amazon a lot. I still like Google a lot. I still like Microsoft a lot. I still like Meta a lot. Problem is those are expensive enough. Like, Amazon's not bad. It's, $180 or so, but Meta is over $400. Microsoft is now over $400. Meta's $600. So it's like those are expensive. If I want to trade options around those and I want to trade that with at least one contract, that's an expensive play. So I have to either dollar cost average, or find other ways to trade it. So Netflix is still creeping out, creeping up to all-time highs. We just pulled back a little bit, but this is why I didn't want to call the top on Netflix. One thing that's probably not tariff affected is just like, yeah, more streamers, more users, increasing prices, adding different tiers of subscriptions. Nvidia, making a comeback. We're still below the 200 moving average. This probably needs to be overtaken at some point. Tesla at 276, possibly a range. But like I said before, I just like selling premium right now on Tesla. I closed out this May 16th was for profit. So closed for profit. So I closed that out for about a 55% winner, and avoided the assignment coming into the 16th. But what I do have is I have some shares of Tesla. And I'm going to continue to kind of work through some covered calls. Berkshire Hathaway, wasn't super surprised to see the market dip. They did report earnings Friday, and Berkshire was down. Yeah, okay. So looks like, from what I saw from the shareholders, so Berkshire Hathaway had an annual shareholders meeting this last week, and Buffett, I think, is officially stepping down. Not like right now, but I think at the end of the year he's stepping down. They're still sitting on a ton of cash. They have like $347 billion of cash, which percent of assets wise might be around 20% or so. But the point is, maybe a range trade. If Berkshire comes back down to the 20 or the 200-day moving average, I wouldn't mind scooping up some Berkshire Hathaway shares, or at least doing some option trades on it. Probably just to find risk, even if I did a bull call spread down here and try to get price to go my way, nothing crazy. But I am wondering, I think everyone is wondering, like, will Warren Buffett start buying stocks again? They've been a net seller for a lot of quarters in a row. And I don't know if he's sitting around waiting for just valuations to drop until they pull the trigger. Let me see if there's actually a Buffett. I know there is such a thing as, like, it's basically a metric that Warren Buffett uses. Like, it's his kind of valuation metric. I just don't see it here. There's kind of like the, you got the Shiller PE, you got the price to earnings multiples, you got the PEG ratio. Like there is like a Buffett indicator that shows whether stocks are valued, high valued or appropriately valued. So anyway, but I don't think Warren Buffett is pulling the trigger on deploying a bunch of cash yet. Bond market, like I said, legitimate concern watching the bond market falling. I don't think the U.S. has had failed auctions yet. That's possibly the next big uncertainty is, I don't know. And maybe maybe there's a line in the sand here. If we look at the TLT, does TLT jump hard off of these lows? Maybe. Looking at the yields here, if you look at, the 20-year yield, just set a chart alarm on the 20-year. I'm going to do this at 5%. That was essentially what broke the basis trade initially. That's where the Trump put kind of came in with that 90-day pause. If the 20-year gets back up to 5%, is it a time to also look to see some type of jawboning out of the administration? I'm not sure. But the 10, 20, and 30-year yields are all, look at the 30-year yield, man. These are so volatile right now. That's crazy. The 30-year yield is up 33 basis points. That's a lot. Average mortgage, 6.76. Currencies, initial jobless claims, let's keep an eye on this one. I put a previous line over these, like 2023 highs. Nothing is happening on the jobs fronts yet that's causing concern. Everyone's talking about recession. Look, we don't have a recession without people losing their jobs. It's always been that way. My concern is that if we start to see job losses, they're not coming back. Like another recession probably gets to deep recession, jobs that aren't coming back because they're going to be replaced. AI is going to be that unfortunate future, and I don't know if the world is excited to have universal basic income, but it's like, how do you have people that are displaced, that don't have jobs, and corporate profits are like, look, profits and margins are as high as they've ever been? Well, yeah, because you're just laying off workers. Because margins are high, that's great. Congratulations on corporate greed. But doesn't help the fact that we've got, millions of Americans and millions of people around the globe that would be out of jobs. So we'll see. But trend wise right now, um, are we going to see this trend higher? Initial jobless claims, it's pretty steady. Continued jobless claims, zoom in on this one. Again, not noticing any real major trends to the upside. Maybe one data point as this is coming in. This is something that prints every single week. So, is this becoming a concern? Not necessarily, not yet. By historic measures, this is still quite low. And then Fed rate still 4.25, 4.5, likely to pause until July. I still don't know why the Fed would have to cut at all-time highs. I said that. Here's China. CQQQ looking okay. Alibaba kind of getting its groove back a little bit after disruption. Baidu, I'm still covered at like 95 and 100. I still like Baidu to the upside. I still like Alibaba to the upside. A lot of asymmetry on those trades. If the U.S. and China can play nice, it wouldn't surprise me if these stocks both do really well. Alibaba and Baidu both have like really good technical measures to the upside. FXI looking a little bit better. JD hanging in there. I've got some covered calls in this one. Schwab dividend, fine. Schwab growth making a nice recovery. So if anybody's contemplating on buying the Qs, this isn't a bad way to participate either. If we have a head and shoulders pattern on SCHG, this pulls back to, let's say, $25, maybe $24. I mean, you can't control the options the same way, but just for a buy and hold, this is way cheaper. And I wouldn't mind obviously having a run from 25 to all-time highs. That's a 16% run. I mean, I don't mind allocating that, tying up way less capital, leveraging. I can use something like synthetic. I can use something where I can add some leverage via options. But yeah, SCHG, it is probably going to be in the arsenal in the next maybe 30 to 60 days. If I feel like I've got a bottom, I can go after and find on the Nasdaq. SCHG, by the way, is a mix of about 200 tech stocks as opposed to the Nasdaq 100, so it's a little bit more of an assortment. The stocks above the 50-day moving average, you can see we're still kind of clawing back where companies are making charges. We're above the 50-day now. We still have about 59% of companies that are below the 200 moving average. So, market breadth wise, we're still in a lot of stocks are below the 200 moving average. That would still technically be in a bit of a bear market position. But if this starts to get over 50, if this climbs over 50, then we have about half the stocks into a buy zone again. And then how many of those stocks are back above the 50-day as well? Because that could, it's a lagging indicator, but if we have majority of stocks above the 200 and then a majority of stocks above the 50-day, we're back into buy zones on a lot of stocks. And that probably allows some positions to recover more. Look at all-time highs or our stocks on their ways to making 52-week highs again. Time will tell. Nasdaq, here's the 50-day. So this is why I use this indicator as a buying indicator. That was a good timing metric when it came to that April 7th, April 8th, April 9th window. It didn't take long to get rewarded if you were long. So I'll continue to watch that. And at the same time, who knows? Maybe at the same time, this thing goes all the way back up here. And then it's a good time to be protecting profit because it oftentimes will lead to a short. If we get too ridiculously overextended, where it's like now, 93% of stocks are above the 50-day. Well, there's probably going to be some profit taking or some tops to form. So this works both ways, but it was a good timing indicator to get long. The fact that the news lined up with that, it is what it is. I didn't know that Trump was going to pause tariffs, but it did make sense based on what we saw in the markets that we were at previous resistance becoming support. Market already had a 20% correction, and seeing this, kind of market breadth indicator, the pain was in. So anyway, that's where we're at. Costco, just checking out some stocks. I'll do some currencies here in a little bit. Walmart, I did sell some calls out to Walmart on August. Yeah, I've got some time. This to me is fairly defensive. Walmart's above all-time highs. The retail signs, we've read some reports of like, shelves will be empty and, this front running tariffs and, the negative GDP. It's like, I don't know if it's going to happen. I guess we'll find out. I barely go to the store enough to tell you. I'd say that if I went to a grocery store and the shelves are empty, that'd be a concern. If I went to Costco and the shelves are empty, that's a concern. Something tells me that those retailers on inventory management are not going to let that happen. So, but it could be, retailers could be like Nike could still be in some trouble. I saw like Forever 21's filing for bankruptcy again. Home Depot, I still like some of the bigger levels to the downside. I'd love to scoop up some Home Depot at better prices. Lowe's, same thing. MasterCard, Visa, my gosh, man, what a rip there. Visa also working its way back up. Amex had a ratio spread to close out for profit last week. Healthcare, insurance, Palantir, what a run. Palantir still didn't even hit the 200 moving average, but we were down 46%, and then Palantir from there decides, yeah, let's just go up 87% in a couple weeks. No big deal. So for all you Palantir lovers out there, you're enjoying that rally for sure. Carvana, nah, not that interested in, a used car company. I think these valuations are pretty darn high. Choppy on O'Reilly, Redfin, Zillow, just looking at the housing market. Uber, crushing it to the upside, took some profit on a 112. Lyft, I'm owning some shares. I bought shares at $11.79. They're up now about $1.30, and hopefully there's some good upside to get into the high teens. If I get a $17, $18, $19 price, I'll take my profit. Overall, Lyft should be up a few bucks. I've got shares for everybody here. I'm up about $2,000 on Lyft. Sector-wise, more interesting currency pairs right now. Aussie CAD still doing his thing. I didn't get the pullback that I wanted. I was hoping we'd have a kind of a 50618 pullback in here. I'm not really getting it, unfortunately, but that's okay. We're filling the pocket. I think Aussie CAD, if it continues up, fine. Watch for this pattern though. We have a move here, a little fake out to the upside. We pull back. Two things: either this is the bottom and we go back up to hit this high around 91.50, or we have a move where it goes slightly lower. So just be a high, low, lower, high, lower, low. I'd still like to buy the dip on Aussie CAD to swing this thing back up into 91.50. So I'm just going to wait and see if I get a pullback. Otherwise, if it gets to these highs, I'll take some profit. Aussie Swiss looking better. Certainly room to get up to like 5,500. If it is going to be if it comes back down here for like a double bottom, that's fine. I'll trade the double bottom. That could be a carved out low. This could be a move up here, third wave. As I keep mentioning, like I'm just watching for, do I have what looks to be a pretty safe bottoming pattern to trade? And I will position accordingly for it. Aussie yen, still getting that risk on trade. I mentioned watch those August 5th lows from last year. And if you were a buyer off those lows, it's rewarding pretty nicely. Long Aussie New Zealand, Aussie dollar still waiting. CAD Swiss, oil's dropping a little bit. I'm looking to see if we do come back down to lows, are we equal lows? Are we divergent lows? I'm still looking for a bottoming pattern. Still going to hang on to these trades. CAD yen, kind of the same thing. Watch this level. This one's holding structurally pretty nice. So we could be in some chop, but if this ends up breaking, up, that could be good. If we hold this level, I still think the upside looks pretty promising compared to the risk. But I wouldn't fight this. I mean, if we're going to make a severe break to the downside and the Japanese yen is making a basket run, don't fight this. So if it holds the lows, a lot of upside potential. If it breaks the lows, I'd want to get out quickly. Swiss yen, no trade. Euro Aussie did not pull back like I wanted. I was looking for a swing trade, never offered it. It's just sliding lower. I'm out. Euro CAD, I still like the sell highs in here. I mean, it's really not looking awful. I mean, if you were to sell the Euro CAD here and it gets back to the highs, I'd still sell this thing. Even if this is this could be a big rising wedge that ends up breaking down. So, I mean, be patient if you like the trade. But I still think we're coming back to like 5,400 on the Euro CAD. Euro Swiss, pretty strong support at 92.25. Actively looking for a bottoming pattern. Euro pounds, no trade. Euro yen, no trade. Euro New Zealand, similar to Euro Aussie, just kind of sliding lower. I didn't get the pullback that I wanted. Euro dollar, I'm sure there's some traders still interested. I didn't mind taking a short position here. If it was short 1 and then short 2, I still think this pulls back a little bit more. At least 30% or 38% between 111.50 and 110.50. If I am short euro dollar, I would be out of the trade here with at least a stop loss, trapping profits. And if it goes deeper, that's fine. But otherwise, I think once we have a bit of a pullback on euro dollar. That's a bit of a pullback on the dollar index. Euro dollar comes back down to these levels. I still think we go higher. Bank holiday today, no. It's Cinco de Mayo. So everyone's out on the beach having margaritas. Pound Aussie also, didn't get the pullback that I wanted. I was looking for that 50618. It didn't pull back deep enough. Pound CAD, I'd stay out of that one. Pound Swiss, offering a bit of a swing here. So, maybe this area for a position 1, bottoms for position 2, but watching, this pocket for profit or this pocket for profit. If you want to wait for confirmation, just wait for a trend line break. But I think a little small trades, dollar cost averaging could get you some profit into the 12 and 1300 targets. Pound yen, no trade. Pound New Zealand sliding lower, no trade. Pound dollar, possibly a topping, bit of a topping pattern here. Maybe a small trade can kind of play the chop and see if this actually does offer a bit more of a retracement. I like euro dollar better. Full transparency, like euro dollar better than pound dollar right now. New Zealand CAD, I'm still long. New Zealand Swiss, I'm still long. New Zealand yen, if you bought the August 5th dip, it's looking pretty good for a couple hundred pips. New Zealand dollar, I'd still like to see a pullback. Either this is sideways for some type of like flag pattern, or I mean, it's rare to see a pair like this just have a no pullback position. So I'd like to see, maybe a little bit more of a consolidation zone, but previous resistance becomes support. We trade into some open space, and let's see if we can get to like 63.50 on New Zealand dollar. Dip wise, I mean, look, draw fib. There's a low, there's a high. Look at filling in some levels in here. Stop loss would be below this swing. As long as we maintain a higher low, a higher high to a higher high. I mean, a swing to a third or fifth wave would be my profit target. That's all based on dollar, dollar weakness. Dollar CAD, super slow and super choppy. I would just stay out of dollar CAD in all honesty. Nothing gets me excited about this indecisive zone. I would say if dollar CAD continues to slide lower, then sure, let's look at this area to buy low. If we convincingly make a run, back into this space above 3,800, 3,900, then perhaps that's a bottom and we put in another rally to the upside. So it just has to be clear. Like right now, this is kind of no man's land on the dollar CAD. I like buying it low. I wouldn't mind selling it high. It's going to just take a little bit more, price action for me to be convinced I want to take a trade at these current levels. Dollar Swiss, still looking at a pocket fill around 87.70, but actively looking for a bottoming formation. And then dollar yen, bottom's going to feel a little tricky, so be careful. But as long as we don't make like a convincing ATR break below, I think this is still, maybe heading higher and higher and higher. Just a grind, just a bit of a slow grind to the upside on dollar yen. And then we'll see if this level holds, like 149. Support resistance, that could be a topping point. We could still slide lower, but I mean, I don't think anybody would be too super surprised to see the dollar yen just stay in this big range. So it looks like a better trade to be buying right now, as long as price doesn't damage that low. Then there's room to get back into the chop zone and, potentially even come all the way back up to this like 155, 156 zone. But if you're long dollar yen right now, I like the 140, kind of the 148 to 149 zone would be protect some profit. Okay. Any other charts, questions? I mean, we have earnings this week. I've got a screenshot. Let me take a look here. Earnings for the week. So some notables. We officially have kind of Mag 7 out of the way now. We have him and hers with earnings after market today. I did close up a nice trade on HIMS. I had a diagonal spread. It was up to 42.27. I had a trade last week that I closed out for like almost $23. I think I paid $17 for it. I closed it out for $23. So that was pretty nice. And I still have some ratio spreads, a 25 by 20. This is a pretty good looking growth stock, in my opinion. Fundamentally, it's due to be way higher. It kind of was a nuts. Like I wasn't that interested in the stock until we were back down to the 200 moving average. So, and what's funny is during, the bear market, it's like I bought this stock at like $5 and it's been up as high as $72. So did I take that profit? Of course not. I took a $5 trade and turned it into, $12, $13, $14. Huge profit. I was happy with that. But now that it's a little bit more mainstream, it's making a nice little run. I think this could offer up some nice dip opportunities to stay kind of in growth mode. But I wouldn't mind owning shares, below $25 either. So anyway, that was just because we have earnings on it today after market. Palantir has earnings as well. I'm curious if that's going to continue to make all-time highs. So let me just highlight these, some notables. I'll keep an eye on those. Maybe some volatility there. O is a aggressive dividend play. Celsius, I didn't know the old energy company was public. Ferrari, curious if the old 1%ers are pulling back. Let's see here. Constellation Energy, Supermicro, SMCI, AMD, semiconductor plays. Uber has earnings. Okay, Uber earnings, Disney earnings. Barrick Gold. This will be interesting for a miner. Oxy, that's one of Berkshire's energy plays. Dutch Brothers, DoorDash. See if those are growing at all. Carvana, AppLovin. These are like fairly earnings sensitive reports. Peloton, Shopify, State of the Consumer. Peloton, probably nothing. What else? DraftKings. Are people still gambling? Probably. Buy now, pay later. Affirm. Marathon, that is Bitcoin related. Coinbase has earnings this week. Trade Desk has earnings this week. So yeah, there's some notables. Let me do a quick scan, see what else I can find. What else is super price sensitive this week? Let's go to a little screener here. So this week, 5th through the 9th. What? Wow. So I've got 77 stocks to filter through. No, that can't be right. Yep, it is. Holy crap. That's a lot of stocks to price through. Let me make sure. Let me at least get prices at like $10 or higher. So I'm going to try to filter out some. Minimum volume. All markets. Stock price, we'll say. Okay, so the stock price at least has to be like $20. Now I'm down to 34. Okay, so that's a starting point. Very sensitive earnings on TG Therapeutics, AppLovin, very sensitive to earnings. Carvana, very sensitive to earnings. Upstart, very sensitive to earnings. Okay, Symbotic Inc., very sensitive to earnings. Lemonade, sensitive to earnings. Affirm, sensitive to earnings. Palantir, sensitive to earnings. Bill Holdings, sensitive to earnings. So yeah, I think we're gonna have some action this week on some earnings plays. That's good. So all right, I'll do some work offline to price out some of those trades. Look for those in the Pulver alerts this week, and I think I'll wrap it up there for my segment. Let's have a good week. Fed this week on Wednesday, likely pausing, but maybe some chop suey until Wednesday, and see if the Fed gets the markets moving a little bit. But a little bit of a slowdown. We're kind of in this like window of like, okay, Fed's not going to cut. We're still waiting on these trade deals to come through. What's the Trump administration going to say? I think the markets had a pretty nice melt up to recover. We're back above Liberation Day levels, but is there going to be a chance to buy a dip? So I hope we have to, number one, we have to get a dip to buy, and then number two, hopefully it's not too awful to take advantage of it. So, all right, have a good rest of the day. See you tomorrow. Bye.
Thanks for watching today's A1 Trading Show. Be sure to subscribe and to turn on notifications so you don't miss the next one. All month long, you can get the Edge Finder 40% off, our best discount of the year. Check out the links in the description below to visit the Edgefinder homepage or speak with a team member directly to get the 40% off discount now. Trade safely, and we'll see you tomorrow.